welcome back to Finance Bread Channel. Today, we're diving into the exciting world of investing. Whether you are a seasoned pro or just starting out, we got you covered. In this video, I'll explore the key differences between exchange-traded funds, which we call ETFs, and mutual funds, and I'll share these 3 tips with you on how to pick a good ETF. So grab a cup of coffee, sit back, and let's get started. ETFs and mutual funds are both fantastic ways to invest, but they have some key differences. Imagine them as different flavors of ice cream, both delicious, but both offering really unique tastes. How wonderful is that? And also, let's take a look at their trading method. ETFs trade on the stock exchange like stocks, allowing you to buy and sell them anytime during market hours. Mutual funds, on the other hand, are bought and sold throughout, by the fund company at the end of the day, so you can only trade once a day. And let's take a look at the minimum investment. ETFs often have very lower minimum investment compared to mutual fund, and making them very accessible for all kinds of budgets. So if you have a low budget, you might want to consider ETF. It's like choosing a family-sized pizza or a slide, depending on your appetite. Now let's talk about money and fees. ETFs usually have lower fees, like a sale at your favorite store. Mutual funds may have higher expenses, though, impacting your overall returns. And you want more ice cream, not more fees, right? So that's an important factor to consider, the fees. Okay, I'm going to recommend tips for picking a good ETF. Now that you know the basics, let's talk about how to pick a good ETF. It's like shopping for the best ingredients to make your favorite recipe. You got to research the index or strategy. And also, if it's a tech ETF, find out which tech giants are in the mix. Also, you got to look at the expense ratio. Nobody likes overpaying, right? Look for ETF funds with low expense ratios. This is the annual fee, and we want it as low as possible to keep more money in your pocket. And also, you got to examine the liquidity. Liquidity is like the smoothness of your favorite drink. When you check the trading volume, the higher liquidity means it's easier to buy, sell. We want a smooth investment experience. And also, a couple of good ETFs for you is like from the S&P 500. For example, Vanguard Total Stock Market ETF, which we call VTI. It's our all-in-one recipe. It really aims to cover the entire US stock market. It's really low cost, very diversified. It's like having a buffet of investment on your plate. How wonderful is that? Another one is a good one is iShares MSCI Emerging Market. For a bit of international flavor, we have the Emerging Market ETF. It's like adding a dish of spice to your portfolio, providing exposure to growing economies. So what's the conclusion here? Investing doesn't have to be hard, right? Yeah, it's not that complicated. Remember these tips, do your research, and you'll be on your way to financial success. If you enjoyed this video, please don't forget to hit that like button, subscribe for more, and share it with your friends. Until next time, happy investing!